Welcome back. This is the sixth video of our squeeze setups onboarding series. In our last video, we established that a bare squeeze has no edge, and that the edge actually comes from layering the turn, the trend, and the actual confirmation signals. Now in this video, I'm going to show you how the platform brings together all of that information and sorts the best setups for you so you don't have to go through every single name. Now there's a few different filters that the platform incorporates, but the first one and the one that's non-negotiable is trend. All of our research has proven that you need to have trend on your side when trading the squeeze, otherwise the squeeze's overall profitability drops substantially. So every single setup we care about has to pass our full EMA stack, has to pass our 34 EMA threshold, can't be in the distribution regime, etc., etc. So it needs to pass our trend filters that we found makes this a compelling setup and makes this a setup worth trading in the first place. Now, once a name clears that gate, the platform then reads a few different things, and you can see these things directly inside of your drawer. The first is the 22-year backtest on this signal. It tells you how has the strategy performed. Is this a good strategy? Is this a bad strategy? The numbers I pay attention to are the average profit per trade and the trade expectancy. Then I pay attention to the win rate. That's because you can oftentimes have a win rate that might look nice, but the overall two metrics actually show the strategy loses money, and we want to avoid those. Now, the second thing that you'll find inside of the drawer is the Confluence. And here you'll be able to see how many different time frames are squeezing together in one quick, easy to view glance. The more time frames we see, I put more weight on that. That's not because we have a higher win rate. That's because through our testing, we found the more squeezes we see, the bigger the moves tend to be. So please keep that in mind. More squeezes does not mean higher win rates. It just typically tends to lead to bigger moves. At least that's what historical data has suggested. So those are the key things that I'm looking at now inside of the drawer. We've talked about trend, we've talked about confluence of different time frames, and then we've talked about the actual backtest data that we see, making sure that this has a positive backtest. Now, after we look at all that, you'll still oftentimes find setups where you have multiple and you need to choose one. There's a few quality factors that we've also built inside of the platform that I want to walk you through, which will help you pick and choose the quote unquote better setups when you need to pick and choose. The two are stack age and extension. Let's start with stack age first, and then we'll move on to extension. Stack age, as the name implies, is a factor which tells us how far along this trend are we actually, and where do we want to participate. I look for the factor value to be between 20 to 80. I found that to be a sweet spot based off of all of our back tests. Under 20, and we found that the backtest doesn't perform as well, and above 80, we tend to see more of the counter trades work as opposed to the with trend trades work. So 20 to 80, sweet spot for the stack age. Second column to pay attention to is the extension column. And in the extension column, the values that I'm looking for are between a factor of 1 to 2. If we can see this between 1 to 2, maybe even stretching it to 2.5, then that gives us this clue that we're entering at a spot where we're not chasing the trade. We're not too far extended away from the mean. Our factor is telling us that, hey, we are still within the realm of entrance. This is an okay spot to actually enter. Now, in some trades, you'll also see a runner badge, which gives you an additional clue that you can piece together with this factor. So if you were to bring everything together, it's very simple. On the platform, first off, you'll see every single squeeze on its own on the time frame without any of our different filters loaded on. This is if you want to do manual research, which I'll walk you through when we go through the squeeze board onboarding video. If you want to use the triggers, which is really the proprietary secret sauce, the triggers go through a handful of filters automatically for you. So it automatically makes you focus on the better opportunities, and then you can use these tricks that we talked about to narrow in. All of the triggers must have trend on its side. All of the triggers must have a 22-year edge on its backtest. And all of the triggers, we're looking for some level of time frame confluence. At least we want to see that in addition to the trigger to help us support the bigger moves as opposed to the other triggers where we might have, say, fewer squeezes. We talked about two different columns that help you figure out which quality factors you might want to have. The two columns were stack age and extension. Stack H, we talked about how we're looking for a factor value between 20 to 80 as our sweet spot. And for the extension, we're looking for somewhere between 1 to 2 as the sweet spot. Less than 1, I've found you would think it leads to better trades because you would think you're less extended, but doesn't really work out that way. Oftentimes, you're catching a falling knife. So 1 to 2, sweet spot that I like to look for. And that's how you go from 600 names down to just a handful of squeezes that are actually worth you risking your capital, or at the very least your time and energy, to research further. In the next video, we'll cover the market pulse and the regime reader that's built inside of the platform, which gives you clues around when you want to do things like ease off on longs entirely and maybe even switch your market bias. See you in the next video.